Hello, this is Mike Swanson of Wall Street Window. And today, I want to share with you the perfect stock charts setup. So let me load up the presentation so I can share the screen with you and show you exactly what I'm talking about. So you're looking at NVDA. Of course, everyone talks about NVIDIA, but this is NVIDIA back in 2023, in 2022. The stock was actually falling in 2022 because the entire stock market was dropping in a bear market. But something interesting happened that turned NVIDIA into the perfect stock chart setup, which it signaled that it was become the top stock uh, in the future, and it did. It exploded, exploded, exploded. So what happened? Well, what you're looking on this chart, and this is stockcharts.com, are two things below the NVIDIA candlestick chart. The first is a relative strength ratio, NVIDIA divided by the price of the S&P 500. And below that is the S&P 500. So the S&P 500 was dropping, NVIDIA was dropping, but that NVIDIA divided by SPX ratio stopped dropping in September of 2022, and it began to go sideways. And that created a positive divergence between this ratio and the price action of NVIDIA itself and the SP 500. What was going on was that the price of NVIDIA was actually beginning to outperform the SP 500. Even though both were dropping, NVIDIA was dropping less. It was displaying strong relative strength compared to the SP 500, compared to the broader market. NVIDIA was falling less. Buyers were coming in to NVIDIA more so than the broader market. Now was a powerful signal that something big was happening. NVIDIA was outperforming the stock market. And that's what you see in this image, the perfect stock chart setup. That ratio, the relative strength, begins to go sideways and then turn up actually as the broader market declines. Stocks that don't fall as much as the broader market does during a correction or a bear market tend to lead on the next rally or the next bull market. And that's exactly what NVIDIA has done since 2022. So you can see this is what we're looking at in the fourth quarter. That positive divergence occurred over 2 months. And then when the market turned up that November and did well in 2023, NVIDIA vastly outperformed the stock market, became the leading stock that everyone today talks about, wants to buy, and so forth. That's all they talk about on CNBC, in fact, is NVIDIA. But there, let me explain how to use this ratio if you're using stockcharts.com. Notice indicators price I got right here. It's a ratio. So you take the symbol NVDA and then semicolon and then SPX, $ SPX or SPY. That creates the ratio to create the indicator right there. So again, look at this. NVIDIA, its price is the indicator, then symbol, in this case, NVDA divided by SPX. Now, today, it's not only NVIDIA that's going up as a leading sector. And we had a correction this April associated with the Trump tariff announcements in the broad market. But interestingly enough, there are a couple of sectors that barely fell at all when the S&P 500 fell pretty good, almost around 15, 20%. And the top performing sector since then has been mining stocks, the GDX ETF, which I do own a position in. So you can see how the relative strength ratio for the GDX ETF has been going up since New Year's. But then in April, when the entire stock market had a pullback, even though GDX pulled back some, it didn't pull back as much as the stock market, and the ratio actually was going up during the time that the market was declining. And since then, GDX has completely exploded higher. It was up 3% this last Friday alone, and the ratio has been confirming the move. Now, another way to use the ratio, though, is you want to flip this around. Look, if you want to beat the stock market, you want to be in the sectors, the stocks that are beating the stock market. GDX is doing that, and NVDA has been doing that for the past couple of years. It also means, though, that you want to avoid sectors that are underperforming the market. In fact, such sectors tend to fall more than the market does when the market has its next correction. So one sector in that position right now is airline stocks. Jets is an ETF that tracks airline stocks. And even though it has had a good rally, a good bounce since April, it's actually still lagging the stock market. Even though it's bounced, the bounce hasn't been as good as it has been in other sectors such as GDX and stocks such as NVIDIA. This ratio, the relative strength ratio for the Jets ETFs has actually been declining since 2023. And these stocks fell more than the stock market in April, airline stocks, and it have not rallied as much as the stock market. So this is a bad sector. It's a lagging sector. I avoid it, and I look, if I'm analyzing a stock or a sector, do I want to buy it? This is one of the things I look for. Is it a leading sector? Is it outperforming the market on a rally? Even better, the perfect setup comes when there's a correction or significant decline in the market, and the relative strength is going sideways and turning up. That's the perfect stock chart setup. But as you can see, we look for confirmation, we look for warning signs, and so forth. So share your feedback in the comments below this video. If you want to see more videos like this from me, hit the like button, and I'll do that. And also hit subscribe to get the next video too. And I'll be talking with you later.